like to call to order the Budget and Finance Committee meeting. Today is June 30th. It is 10:26. Ms. Rakowski, would you like to call roll?
Mayor Lake,
Here.
Councilman Tony Brown.
Here.
Everybody is here. I'd like to also introduce Miss Sarah. She is our new fiscal administration. She does a fantastic job and she has ample amount of experience. We're very excited to have her on board.
Welcome. Thank you. Welcome. The first item on and the only item on this agenda today will be item 1, which is the fiscal year ending 2020-2021 budget audit. Would you like to approach the podium
Sure, thank you.
so we can hear you and record you?
I don't know if I need this or if I can just talk without it. Sometimes it's
You gotta
just...
have it because it records.
Oh,
over the-
okay.
You're on.
I'm on?
You're on.
Okay, great.
All right.
Well, thanks for having me and calling this meeting at such a short notice. I know we were trying to finish up by this end of this month, so that's good and well. Quite a bit going on this year, so that's why I thought maybe it might be more appropriate if we talk about this a little bit before, while we have maybe a little bit more time. But I'd like to start off with the Community Redevelopment Agency audit.
Are we going through are we looking at the draft one or the other?
One that says
Well,
that.
Okay.
It's basically the same as the final. I had sent you the final this early in the week, but it apparently didn't get sent out to you, but it's basically the same.
Okay.
And as I was saying, as you know, this is the first year we've had to have this separate report.
Right.
The Auditor General's coming down saying, we want to start making sure all these compliance issues are being dealt with. And so anytime you have more than 100,000 funds in revenues or in expenditures, you're going to have this requirement. And it first cropped up when we filed that online at the AFR, which we do every year, and you get done and then it starts asking you these questions and says, hey, you gotta have a separate audit if you're over this, and you look up the statutes and sure enough that's what transpires. So I forward a 2-page checklist to Lynn to let her know what I'm working off of as far as requirements and so forth. And so those are some of the compliance issues we'll talk about that came up and so forth. But what I'd like to do is just start with the results on page 11. And that's where we have your budget to actual report. Kind of shows what transpires this year. You had received that $46,000 from the county, and that was deposited in October. We had to make that receivable adjustment at the end of the year. And so you had additional income there. Other than that, your revenues were pretty much in check as far as budget to actual. On your expenditure side, you ended up amending your budget, but then you still had some overages in your capital outlay of that $16,000. Now they have it in their checklist that they want you to make sure that each line item doesn't go over. The total expenditures were over, and that's what I reported on, but they would even prefer that you drill down further and make sure when you amend your budgets that each of those groupings is okay and not over the budget item. Now I'd like to point out that you guys amended the budget in July, which was great, but then we need to do that final step at the end of the year. And we'll talk about that a little bit more, but at the end of the year, you're getting reports and your actual expenditures were greater than your budgeted expenditures. People reviewing those reports, somebody needs to stand up and say, okay, we need to amend this. And that's really one of the good internal controls is when the reports are prepared and they go out to you two and to Lynn, it's important that you guys ask questions and then be aware, that's the one thing that I have on my plate is if the total expenditures are greater than budget, then hey, let's amend this, let's take a look at it. I'm getting ahead of myself a little bit, but one of the problems I think is that the reports aren't very easy to read and you get a lot of pages in your monthlies. They gave me a copy of what you received for the month of September. There's like 20 or 30 pages in there. And then if you look at the CRA reports, the lines are kind of skipping like this, and it's just inherently it's not that easy to look at. So with that in mind, I'd like to kind of jump to page 22.
Can I interrupt for a minute?
Yes, please.
Lynn, remind us why we had more expenditures than income?
than budgeted expenditures.
No, it wasn't more than income. It was just what was budgeted, and we had some grants and some other things that were going on with the beach during that timeline. And so it was a matter that we had opportunities before the fiscal year ended, prior to after the fiscal year ended. So our budget, we didn't overspend what was in what we received as far as income, but some of those grants and other items that we had going on with the pavilion, they fluctuated between the time period of August and November.
Okay.
And sometimes it's difficult to predict. And so I've always said, whenever you have like a grant and you're doing the budget process, go ahead and budget the full amount of the grant and a full amount of the $46,000 or $92,000 revenue and expenditure. Go ahead and budget the full amount, even if you don't expect to expend it, so at least you know you're not going to go over that amount. But the second task to that is, okay, when you're looking at those monthly reports or year-end reports, you've got till November to amend any budgets incurred through September. So there's a 60-day window after the end of the year. So we get those reports for September, we're over, we need to amend this. So that's something that maybe everybody could pitch in a little bit.
Yeah.
And to try to avoid that.
And we're going to take care of those budget amendments next week, right? We're going to start talking about those amendments?
Yes.
Okay.
Yes.
So hopefully keep our side of the street clean before you have to.
Yeah, okay. Getting Rebecca more involved in that process too will help, as I'll point out moving through here.
Okay.
We talked about, okay,
You
let me
wanted
just go ahead.
You wanted us to go to a different page? Is that what?
Yeah, let's go ahead and take a look at page 22. Let's just start at the beginning on page 22. There was three findings and then some recommendations that are easy to implement. And again, this is based off the checklist that they just developed a year ago. Of course, if you're going to have any findings, you want to have them in the first year. Let's get this and let's move forward. The first is that they want you to send the approved budget to the funding source, Clay County, within 10 days once you get it approved. And anytime you amend it, just shoot them an email with an attachment. Okay, that's easily rectified. A lot of people don't do it. I'm just trying to follow the checklist that's provided me. The second finding on the top of page 23 is kind of what we were just talking about, where the budgeted expenditures should not be exceeded by the actuals. So you want to make sure your actuals are less. And so you guys did a good job in July. You amended your budget, but then you kept going with those expenditures, and we needed to have like a second amendment or curtail the expenditures. Wait a minute, we don't want to go over on that. So you went ahead and increased them, but they were still over in the final result. I'd like to stay on that point, and we had a couple recommendations related to that on page 26 before we go to the third item on page 23. On page 26, when we talk about those amendments and so forth, halfway through the page on 26, we have a recommendation about the timely updates for the amendments. You did that amendment in July. That September report that was provided me, that apparently was provided everyone, didn't include that change in your budget. Okay, so you were working off incorrect information. Either case, it would have been over budget anyway, so we should have acted on it. But there's two issues there that I think, have Rebecca get more input from her and have her help you with those reports. Make sure they include the current budgeted information, and then also act on those information and make sure that you're monitoring the budgets. And do we want to spend this, or we want to wait till next year, or should we go ahead and make that amendment? And those are things that you guys can do, but she's a CPA, she's on board, she should be helping you with those things.
Okay.
So that's easily rectified in my mind. And then maybe a third thing is in your budget and finance, maybe improve the documentation that you've reviewed. What you've reviewed, like, are you meeting on a quarterly basis? We reviewed the financials as of June 30th. Here we are in July, and we see no need to amend, or, you know, we've asked questions about this and this, just a 1 sentence or 2 sentence, that's always kind of a good process to maybe improve the documentation, because like when we do our internal control checklist and we're, you know, are they handling the money? Are they doing the right things? One of the biggest controls is getting interim financial statements to the decision makers, the council, the mayor, the managers, so they can look at them and say, hey, what's wrong with this? It may be okay, but let's ask questions. Why is this this? Why is this that? Okay, we don't want to exceed this, you know, and then act on those. So
Can you put that on the schedule? Can we do quarterly?
it's good to document, or which, obviously you want to review the most current minutes whenever you have a meeting, the most current financials.
Right.
So, you know, Rebecca's coming in on a monthly basis. Is she giving you guys financials every month? Then whichever is the most current month when you meet, just kind of make sure you document that you've looked at those for the CRA, the general fund. Now we have the CIP fund, and just make sure that, you know, you guys have shown that you've looked at them.
Okay.
That really helps.
And we talked about timing too after Mr. Millions left. We had, with our fiscal becoming married, a honeymoon, COVID, all in that same period, and then our CPA with vacation, summer vacation, there was a lapse in when they were capable of inputting that budget.
Okay.
So,
All right. So we can get on a more regular schedule?
yes, and generally we are. There was just not every year we have wedding and honeymoon.
And it's good to get on a regular schedule, but it's especially important at the end of the year.
Yeah.
Because you can wait and do as long as the final budget and the actual, that's what I'm looking at. And you guys want to keep tabs on it each quarter at least, to document that you've looked at it and so
Yes.
forth. But then make that, especially that extra effort at the end of the year, because that's when it, you know, ends up in the audit report and so.
And we don't plan to spend anything else out of the CRA for the rest of this fiscal year, do we?
Just little things that are already budgeted, so I wouldn't anticipate our that all that will be taken care of through our amendments. I don't anticipate any big expenditures by the end of this year, and we're still waiting for reimbursement of that the additional $46,000 from the state. So until we receive that, which hopefully is soon, we've just sent in the rest of the checklist, then we'll be able to move forward with the grant. We'll have those fundings available, but I don't anticipate that being this fiscal year.
Okay.
Now, I took a quick look at your current budget, and I didn't see where it included audit fees for this new audit requirement. And then we also have on page 26 another recommendation that should benefit the city is you're doing all this accounting and administrative work for the CRA, but there's no cost incurred by the CRA, but you're certainly within reason to go ahead and charge them between $5 and $10 grand a year.
Yes.
You know, so they don't have to have their own employee to do all this, you know, as long as it's not exorbitant.
Right.
So that, you know, that'll help the city pay for the cost of the employees and so forth. You know, just, you can do it one of two ways. Of course, you could treat it like the cemetery. You want to keep track of everybody's time and nickel and dime it and all that, but we're okay with just saying, okay, let's kind of keep an eye on it. It's like $5 or $6 grand a year or 10 grand a year, depending how much work is done there, is fine with us.
And you could make that recommendation, Ms. Rakowski, based on the amount of time you know Sarah's going to be spending on that?
That's going to be part of the budget amendment is now that we have the final fees from the audit, because we ended up amending that earlier this year, the contract with the Reddish and White, and then also staff time and additional CPA time will be included in that revision.
Okay.
So then if we flip back to page 23, probably the most interesting finding they have is if you don't use it, you potentially lose it. So, and that's in that checklist. It's actually embedded in your CRA document that's quite old, that says that, you know, the Clay County's giving you money. You're not really supposed to sit on the money, and you want to go ahead and budget everything you have every year, but what you don't spend, you want to go ahead and document that you're going to budget it in the next year's budget related to what you hadn't spent on a previous project. You have other items that you can potentially spend that money on or lock it up, so to speak.
How would we lock it up?
Well, that's probably a poor wording. Let's just start with that, the 2021-3 status of unspent funds at the end of the year. Return to each taxing authority which paid the increment and the proportion of that payment bears to the total amount. So a pretty hefty percentage would just go back to Clay County if you haven't spent it. Most people don't want to return the money. So you can reduce it to pledge reduce it for any outstanding debt related there, which isn't applicable. Put it in an escrow account for future debt, which really doesn't apply. The easiest one is that fourth one there. Appropriated to a specific project that hasn't been finished and carry that over to the next year. So you basically, if you have $16,000 in your bank account at the end of the year, say, we're going to go ahead and amend our next year's budget and assign the $16,000 to these projects that we were hoping to spend it on in the current year. And then you list each project and the amount you want to designate, assign, designate, and then that shows up in the budget moving forward. And then each year you carry those amounts until you spend them.
So that could be like the streetscapes,
Yeah.
rolling it over?
Yes.
Okay.
So this is, I've sat down with Rebecca on this for several times on what that looks like, taking in the last conversations that we had with Mr. Millian will adjust our budget to better show the allocations and the carry forwards of that.
So you're going to make a clear distinction that each project type and the amount budgeted for it?
Yes, of what's being carried over and what needs to be spent. That way it's abundantly clear that the funds are allocated
Okay,
from the last fiscal year.
okay.
Right, and so you kind of look at where you are at the end of the year and then see, and if you receive that extra 46,000
Right.
that you're expecting, then that probably factor in there and so forth. Because the CRA fund has a finite life, right? It's about 30 or 40 years. I forgot what the number is. So it's not like we got to keep money set aside for a rainy day. They just want you to go ahead and every year budget everything you got. So that's where we are there. And again, having Rebecca more involved and helping her with this budget process and reviewing the budget certainly will help. That was it for the CRA fund. So now if we could switch over to the city. We didn't get that finalized. I didn't get your response, signed response till yesterday, so I sent that PDF copy to you, and I'll have to bind up a couple of reports, and I can just go ahead and send them to the state unless you guys want to come by and pick them up and mail them yourself. Each year we have to send a bound copy
Okay.
to Tallahassee, so I can just go ahead and do that.
Okay, that'll be, so you'll send the entire packet in, then I'll submit it electronically.
Yeah.
Perfect, thank you.
Yeah. So getting to the city, a lot happened here too. We just all kind of things going on. As you recall, we made that decision to split up the funds. We're now showing the CIP fund separately. The lake fund, I was making that suggestion until I looked closer at the definitions. Since it's so small and your revenue source was from the general fund, you're not getting from outside fund, they really don't have a category for it any longer. So it has to stay in the general fund.
Okay,
So if we look at page 14, if you have the entire report, you'll see that the third column is the new one here, the capital improvement fund. And then it's also reflected like that on page 16. Now you saw that in the draft, you just didn't, we had a different presentation in the draft, but I just wanted to point that out. So both the CIP fund and the CRA fund are considered special revenue funds. That's because they have a specific revenue source, and so we can show those separately, and we keep that accounting separately, so I think that'll make everybody's life a little easier. Tony, do you have a copy of that?
I don't know if I'm on the right.
So what we're talking about is
I'm on page 16, but I don't,
No, on this one.
this one, okay.
I can just look at the CRA.
I'm in the draft thing.
He was still in the CRA budget.
That looks a little light, though.
It's double-sided.
Okay.
Saving the tree. You say page 16 we're on?
16.
14 and 16 had that new presentation that I just wanted to.
All right, I got you.
So again, like we were talking about, that you've always had the CRA fund there, even though it's a component unit. We call it a blended component unit because it really acts like a fund because it's got a special revenue source. Whenever I'm not sure how to report these things, the Auditor General has everybody's reports for the last 5 or 10 years. So I go and see what the Alachua County's doing and what other people are doing, and you talk to different people, and it makes sense. And that was the way I had it, and I saw other people having it that way, so I felt good about that. And then the capital improvement fund is a special revenue fund we can keep separate because its source of revenue is always going to be the state discretionary revenues. And again, the lake fund we got to keep in the general fund. Now, in accounting, talking to Rebecca, what we thought would probably be best is you guys really don't want to see the lake fund in the general fund during the year, so she's going to account for it separately and keep track of it separately, and then at the end of the year I'll just journal entry it in and add it to your general fund for my reporting purposes. So the 2,000 going to the lake fund, we show it as a transfer out in the general fund, a transfer in on the lake fund. Those kind of net out so they don't show up in the report. And then there's just a small adjustment to culture and recreation for anything that's budgeted and expended out of the lake fund. So it's really pretty negligible. But we understand that you guys don't want to see that in your general fund, so she's keeping track of it separately throughout the year.
Okay. It will be important for us when we budget because we allocate normally $10,000 each year.
Yes, so what's going to happen is that it's still going to be separate. We've had conversations, and to address some of the things that you talked about as far as the reporting goes, I'll tell you Sarah's amazing. So I don't know that it's going to be this coming month that you'll see it because she's still getting her feet wet, but the reports that she sends me are extremely reader friendly, and I think the council's going to find that as well.
Okay.
The knowledge that she has is fantastic. I can't tell you how excited I am about this relationship. However, with that being said, with the lakes, we're still going to keep its own book inside QuickBooks, its own company inside QuickBooks. That way we can track it on a separate basis, make sure that we're keeping the account where it needs to be and what exactly is coming in and out, as opposed to lumping into the general fund as far as our bookkeeping and your visibility. And then they'll handle that on the back end at the end of the year to put that back together where it needs to go as far as, was it culture and recreation? That
Right, I think that's what we say, that since it's taking
that
care of the lakes.
Yeah, it's gonna go back into the culture and recreation side of that, of the report. But for
Okay.
our visibility, it'll remain separate.
So, and if I recall right, I mean, that balance fund is around $40,000 or
That's
more.
correct.
So we're not going to probably even put a complete $10,000 in it this year.
Well, that's going to be one of the fantastic things about your reports, is that we'll be able to, specifically on that account, we'll implement what our cash basis is, what's allocated in there. So that we can truly see what activities happening in that lake account.
Yeah, I think for the most part, we only spend it on the permit, the DEP permit, and taking care of the lake, right?
Yes, so it's all lake-related activities that happen. If we have any maintenance that's required, our buoys, things like that, that's lake-specific, gets spent out of that account.
Okay.
The balance was $35,400
Oh, really?
at the end of September, so it might even be less than that now. So
Last year, yes, because we only implemented to bring it up to $40,000 at the beginning of the year, and then spent our funding from that. So this year, we'll be putting in another $10,000 and continue that.
Okay.
Because of COVID, we took that back a little bit.
That's right, I remember that.
Yep.
So that's fine to do it that way, and we'll just make an annual adjustment. The other option is it's okay to have that separate checking account just for the lakes in the general fund, and then just add those items to the general fund budget and just keep it all in one too. If it gets to be, that's another option. So,
Okay. You
but it
comfortable?
sounds like you have a good path as far as
Okay,
keeping it separate.
yes.
Okay, let's take a look at the general fund on page 36. This was really close to the draft I sent you. It's just a small amount of an increase in the culture and recreation for the lake fund. But when you look at these numbers, you see the results. It's always a positive indication. You look at the first subtotal, the total revenues. You're coming in at the actual is greater than your final, so that's always a positive. You want to definitely be conservative on that. You want to have more than you're anticipating. You don't want to be banking on money that's not coming in, and so you guys were real good as far as predicting what you're receiving. And then on the opposite end, your expenditures, just almost every department fared favorably compared to your budget, your final budget, and you did amend the budget. So your expenditures ended up being 58,000 over, positive, excuse me. You had one, public safety, I think might have gone over a little bit. And again, on the general fund, it's the total expenditures, not each line item, so it's a little confusing. Like we said, CRA, they like to see each line item maintained because it's specifically written there. But this, we say at the legal level, the level of control is the total. So that's the number we were looking at. The transfers out, you can see it was just to the CRA. We used to have, if we had the lake fund separately, you'd see it in there, but we net that out with what the lake fund is, so we're good on that account. So
What is public safety? What does that cover? Just safety equipment and stuff like that?
So, yes, safety equipment, things that we utilize for emergency purposes, and then cameras and safety security is more a general term.
And then obviously the big one there is the capital outlay public safety. That was your pavilion with those with the funds. I get them confused, AARP or the other ones. The government money building the beach pavilion there. That's where that 750,000. And I would like to point out that we were dangerously close to a single audit this year. When you expend more than $750,000 of federal funds in 1 year, you have to have this single audit, which is a whole nother
Layer.
compliance. Yes, and I was able to back out some of the expenditures because we recognized them in the previous year. And then your trailhead, that was 46,000 of federal funds, but that was in a separate, and it's like the number came out like 724 instead
wow.
where 750 is the, it's like, so, and that's another reason why we like to have maybe more adjustments done at your end through Rebecca at the end of the year, so we kind of have a better idea of what we're getting into when we come into it. Because I'm finding I'm spending so much time just reconciling the balances and doing cash to accrual adjustments and making sure your receivables are right and stuff. And in our mind, a lot of times that's what the CPA, the internal people should be doing and so forth. So we'll talk a little bit more about that. But let's go ahead and flip through page 37.
And if just for a moment, just for council's visibility, bittersweet news is that we're not going to come close to having a single audit this year. So we don't have the funds we don't have federal dollars to equal to that amount. So.
And it's also a state issue too if it ever goes over 750.
Right.
So one of the things we talked about is maybe meeting in September to kind of do a planning. No one likes surprises, and kind of look at where the numbers are, remind Rebecca what we'd like to have her try to accomplish before we get started and things like that. I think it'll run a little smoother. This year was one of those Murphy, it's like you've replaced 3 accountants, all these different things happen, and this first time for a CRA audit, and you had a project in every fund.
It was a busy year.
Yeah. So I just wanted to point out page 37 is exactly the same page as in your CRA report. Okay, it's just required to be in here in addition to that separate report. Okay. So we don't need to spend any time on that. Then page 38 is a new presentation because your capital improvement fund is considered a special revenue fund. It's required to have a budget to actual presentation. The cemetery fund is an enterprise fund, and that's not required, so you never see that in this type of situation here. But And I want to remind you here that the taxes, those are your discretionary sales surtaxes for infrastructure and capital improvements. This also includes your recap fund. Now that was a fund that had quite a bit of money back in 2015, I think, when you, basically that was back in Paul Yates's years when he wanted to designate all that money that you had sitting there. He didn't want to make sure it was spent frivolous, or he wanted to make sure it would tie up for a specific purpose. And that's kind of winding down where there's not a whole lot in there. But you did spend 6,900 of it on, I think, trees. And nothing was budgeted there, so that's why you see those zeros under that first line in your expenditures. So we've kind of merged that with your CIP. Your recap and your CIP are kind of one fund now. I got a feeling that one's probably just going to kind of wither away unless you guys decide to put more money into it. That's just something that you'll have to look at and see if you have adequate reserves where you want to assign it to this specific situation here. But for the most part, this fund's just going to be your discretionary sales surtaxes.
Okay.
And again, it's always nice, you know, you go ahead and budget these resurfacing projects and so forth. It's almost like a grant. You never know how far they're going to get in any one year. So kind of go high on that. You've got the money there, go ahead and budget it. You know, anything that doesn't get spent, you can always carry it over. You don't have to formally assign it carrying over to next year. You just go ahead and do your budget like you do.
On the revenue taxes, are we gonna see that go up some with having the gas station?
No.
Is
So
that something-
actually, we're going to see quite the contrary of that, and that's something that Sarah and I are going to be battling with, is with the suspension of gas tax and taxes of that nature. It's going to affect our budget when you start talking about some of this stuff. So we'll look at what that's going to look like. As you can, if you recall, several years ago, back when Ms. Kapelousas was still the county manager, they implemented a step-down program because they went through and did a reallocation of how those taxes were distributed, and Keystone Heights kind of got the shorter end of that on
Yep.
the reallocation. So we'll start seeing that number drop.
And if
And then there's, I apologize, there's an algorithm of gas stations, so the gas tax that comes in from that gas station specifically doesn't come right back to the city of Keystone Heights. It goes into Clay County as a whole and gets redistributed into that or to that factor. So
Really?
Yes.
So we're not getting.
We're not getting 100% of what the gas
correct.
station is producing?
Yeah, that's correct.
Tony, that's just wrong.
So, that's why it's very, very important that you fill up in Clay County. And so it's one of those things that I never really took into consideration or realized until getting into where these fundings are coming from. And I'm getting on a soapbox, I apologize.
I'm learning.
But if you go down to Midway in, Bradford County, your tax dollars are going to Bradford, they're not
Yep.
staying in Clay. So it's one of those that's, be mindful of where you spend your money. Same with the
absolutely.
sales tax is, you know, if you spend if you spend your money somewhere outside of the county, we don't implement our own taxes, but if you spend it outside of Clay County, it goes to elsewhere. So it's just one of those, you know, there's reasons to shop local, and it's not
Absolutely.
just for our mom and pops what their revenue stream is. It's where your tax dollars are going.
And where they're coming back to.
Yes. So.
All right.
And with that in mind, you could look at page 14 because you have some reserves there in your cash and your CIP fund. So I know you always like to have a balanced budget each year as far as we don't want to spend more than we're bringing in, but
What page
if
is
you
that?
can find that
14?
balance sheet on page 14,
Okay, I'm going backwards.
where we've got the three different funds listed there, your CIP, you've got that 365,000. So it, you know, that's set aside to spend for infrastructure along with your investments there. So how do you guys do that? When you look at the most pressing needs as far as roads go when you're doing the
Yes.
budget? And
Yes, we have a windshield. Our engineer identifies and measures those roads and then ranks them.
okay, well,
Am I right? Did I say that right?
Yes, that's correct. So this year we put efforts into planning, redoing the windshield because we have taken care of all of our critical needs, our roads. And then we'll be evaluating over the next couple of months of what our next windshield is going to look like, reappropriating, reallocating where our roads will look like, what roads need to be done.
Your windshield?
Yes, our roadway windshield. So it's a report that's generated from our engineer, and it assesses all of our roads
Okay.
and lists them from most critical to, lifespan of 30 years, and which the order that we need to address them. And then we match that up with the funding that we are anticipating getting, and try to do the best of, if we're getting 100,000 in, this is going to cost $100,000 roughly to take care of.
Are you guys prefer to keep all this money here as opposed to spend some of it? Or if you have more pressing needs, or there's 2 roads that really have to be done, you've got 500,000 sitting in CDs and your bank accounts.
So the CDs, we will be addressing on whether or not they want to keep them into CDs or if they want to turn them in, bring them into cash so that we can utilize that for our CIP. As far as our cash basis goes, we're finding that the roadways, improving the roads, are far surpassing what we're actually bringing in on an annual basis for revenue.
So you realize you'll be dipping into this at
yes,
the time.
we're going to see
We did that.
the need to cash in some of those CDs coming up, and we've already done
We've already
that.
cashed one in.
Yes, we have.
Yeah.
So.
Okay, that's not really an audit
Yeah.
issue. I'm just kind of curious what the mindset is as far as that goes. But okay, moving on. Let's talk about the cemetery fund. That's on page 19. Again, you had a lot going on over there with the remapping, and then I call it a mausoleum because that's what I'm used to calling it, that little building there with the urns in there. I pointed out that the sales increased there, but I was a little bit remiss. I didn't realize that COVID probably had an impact on that.
Right.
But really the bottom line that we are looking at is your operating income, and always making sure that's a healthy, positive number. And 33,000 over the history of this fund is real positive. A lot, it's an enterprise fund. It's got to pay for itself. Even a lot of times depreciation is a large number. That will be going up once we get that building moving this year.
Yes.
And so, but it looks like you have a pretty good buffer there. So there's no issues really there that I see. We have another issue with the lease, the cell tower lease. Our accounting standards are changing where we're now going to be requiring us to capitalize that. So there'll be some adjustments possibly, potentially there. It kicks in this year. They're always making these new government accounting standard changes and so forth. So that's something we'll need to look at the end of the year.
Does that number ever go up? Do we charge more?
Every 5 years, I believe you have
Yes. So we're actually, Sarah and I will be on a call after this meeting. They have proposals on lease options, and then with the internet, that's the funding that's come available from a federal level for implementing internet. We've had a lot of inquiries about purchasing, and so we're going to gather as much information. That'll be a point of conversation in the next budget and finance meeting on what that looks like.
Okay. Because I seem to remember, one time it was $10,000, I think. Do you
Yes.
remember? Yes.
Yep. Not too long ago, I can't remember the year off the top of my head, but in the recent past, it came up to about 13,000, believe is where we're at right now.
Yeah, the lease began back in March of 2000, and every 5 years you have a next escalation clause.
And a lot of times they come and they want to buy us out on the property. I don't know if you've ever been involved in that, but I know we've been approached in the past. They don't want to lease, they want to just buy the property, and we've always said, no, we're leasing. That way we have control of what
Yeah.
they do up there.
That's smart.
I've had some conversations as far as that conversation goes, and Sarah and I will be in a meeting this morning regarding that. But there's some pros and cons both ways, and so once we're able to gather the information on what they're offering, then I'll have to have a conversation with you in the near future on what that looks like for auditing purposes and what we're allowed to do.
There's no tax
Yes. So.
consequences. You got a crystal ball, I can tell you that.
Yeah. Well, so there's some forecasting that's involved.
But
too, I
you
think.
get a 15% increase every 5 years is the way
Right.
it's written now. So that's,
Huh.
yeah. You'll just have to see what the number is.
Right, oh, absolutely.
Yeah. But again, this year you'll have some accounting adjustments. They did some remapping, and you had $6,000 worth of undeveloped land that we took a walk over there and figured out that that's related to this new inventory that's been added on, and so there'll be an adjustment there that needs to be made. So there's some accounting situation there this year. We've also 60 urns, I believe. I'm trying to remember that we'll be adding into.
So we've added the 62 niches, which
Right.
allows for about 124 urns, and then the ossuary portion of it as well.
So we basically added it in this year, but we didn't say it was available for sale because it really wasn't quite.
It wasn't developed in this audit. It wasn't ready during this audit
Okay.
process.
On page 32, you can see where we added the property for the cemetery. We had $47,000 of costs incurred from a previous year and added to it the cost this year, so that the cost of that building ended up being close to $88,000, if I'm not mistaken. So that's what we capitalized this year. So there's a lot of things going on. If you flip to the previous page, page 31, I should have mentioned this before when we were talking about the general fund, but when it's not just the general fund, it's also the CRA fund and the CIP fund. Whenever we do your fund accounting, and then we have to do the governmental activity where we show your fixed assets and so forth. This detail here, the note 8 on the bottom of page 31, we show that your total increases were like 1.1 million this year. That's your beach pavilion, that's the trailhead, that's the CIP road surfacing, so and the pickleball court and the stuff inside the beach pavilion. So there was a lot going on this year, and that's where it goes when we do the governmental activity financial statement. I'm backing up a little bit, but that's the one on page 12. I know I'm throwing a lot at you here, but again, every year we do your financials are done two different ways. One is the fund accounting, where we don't capitalize anything, and then we have to make these conversion adjustments to where we add your fixed assets in and any long-term debt you may have. So page 12 is kind of like your balance sheet would look like if you were a for-profit business. And that's how the cemetery is required to keep it each year. So
Looks like we're rich on this sheet.
Yeah. You're big time.
as you can see, like you have a subtotal of total assets halfway through there, and that first subtotal above it, the 5 million, that's your net assets. That's your gross assets less all the depreciation. So that detail we just looked back to on page 31 showed the detail of that. That ties into that number, so you can see where all that's going and so forth.
And isn't the airport the same way? So this 11 million for the airport is what it would look like if it was a for-profit business?
Yes, and that's very good. That's on page 33. We put their detail in on page 33, that 11 million. So a lot of activity going on there each year. And one of the things included in your capital assets is the physical environment, the sewer, that joint agreement you had with the CCUA. They ran the grant funds through you guys, and so we capitalized that large amount. And each year we're taking $237,000 of depreciation, so there's a large number showing up there each year. On page 13, we try to show what each of your different governmental activities is incurring when we add in the depreciation and so forth. And physical environment, that 237, that's all that is that depreciation on that deal. We're going to depreciate that down to zero, and then they're technically getting entitled to it if they don't have it already. I'd like to see how they're accounting for it, but this is the way we were supposed to account for it when it transpired back in '04, so it's winding down. So every year it kind of throws us, you got this huge depreciation number coming from the physical environment. course, transportation is going to have a lot of depreciation too with all that infrastructure. Let's skip over to the recommendations on page 42. Excuse me, wrote that down wrong. On page 39, see, we just had one this year, which is positive always, but we're getting pretty complicated with our accounts receivable. You typically treat your accounts receivable on a cash basis, and so at the end of each year, we'll come in and make that adjustment and convert it to accrual, what is actually owed you at the end of the year. But there's 3 customers where you guys have to send invoices to. And so that means you're on accrual basis because you're recognizing that revenue when you send the invoice out rather than wait for when you receive the payment. But then all these other people, you're recognizing it when you receive the payment. And then to add to that confusion, journal entries we had in the previous year didn't get posted to the receivables. I do a separate adjustment for each customer because you can't go into QuickBooks and post it to 2 customers, one adjustment. You got to have them separated out. Well, for some reason, 4 of the adjustments didn't get posted. Then you've got some on accrual, some on cash. I was like Sudoku 101. That was a real challenge. And Rebecca swears she posted the adjustments, but somehow they're not in there now. But again, we had all these different.
Can I ask a question? Who are these customers?
Well, a lot of times it's the governmental grants we have to record a receivable for, and some of them a large customer is the state. I didn't bring that work paper in here, but you got the DOT that you get the $13,000 each quarter from. There's a couple other ones like that. The CCUA, we update that each year. You know, so basically we take out the money you received in the previous October and add in the money. The money you receive in October 2021 is really September, earned in September, so we add that back in. So there's a lot of small ones there. And then there's some that have just need to be cleaned up that I give her the adjustments each year, you know, let's take care of these. And so I'm really being adamant this year, you know, finally it's like, okay, we've got to clean this up. And so I've given her the spreadsheet that I have that shows the detail, give her the adjustments, and then told her how to clean up the detail listing. Because sometimes she posts the adjustments and just says unadjusted, you know, just a fictitious account rather than keep track of the detail. And so it just really turns into a cumbersome project that should be clean when I get in here. So I'm challenging her to do that. I'll be glad to come in and show her how to do it if she can't do it. I tell her every time you make an adjustment that you're not, you know, you don't want it to have any effect on the balance sheet or income statement. Print those out first, then let's go in here and clean this up, and then print it out again and make sure nothing's changed. Because you might have to, you got to sign some credits and then sign some invoices, but charge it all to the same account so they wash out, so then you can basically clean up this listing. It's just accounting 101. It's just something that needs to be done.
So with that being said, though, that's one of the areas that we're going to focus on as we meet in September prior to closing these books, is making sure that all that's taken care of on our CPA's end appropriately.
Well, I would hope that she would go in and when she posts the audit adjustments as of September, she checks and sees the balance is correct, then go into the detail and go, okay, I need that detail to equal this detail. So
Right.
You issue credits, issue invoices, the net effect is 0, clean this up. So then when we move forward, we'll know which one's changed, but the other one should be,
Right.
it shouldn't be a.
So I'm trusting that's a staff adjustment that you both will make in terms of tracking
That
Rebecca?
is, those are adjustments that he gives for our CPA to handle. So that'll be handled when he refers to the meeting that we're going to sit down with Rebecca. Those are all things that we'll be looking at with our CPA and the relationship between the city and our.
It's kind of 2 issues. One is go ahead and clean it up to make it reconcile to what I have at the end of September. But then when we start doing the audit for the next year, let's go ahead and make the proper adjustments and get this to what you think it should be. You know, go ahead and make the receivable adjustments. There's a vendor report. State will tell you what monies you're going to receive before you receive them. we know what the number should be. Or you can go in October and see what you received and go, okay, yeah, that is September. Let's go ahead and, that's just pure accounting work that I think your CPA should be able to do.
Okay.
And so what we've done is we've spent so much time doing these things. This is really one of the biggest issues that we have, for this meeting. It's moving forward is like, they passed a yellow book, new yellow book, it's the government accounting standards. And really the big issue is us maintaining our independence. When we come in, we're doing a lot of this non-audit work. It's called non-attest services. Preparing the financial statements is non-audit work. Doing those cash to accrual conversions is non-audit work. Doing your depreciation schedule is not audit work and things of that nature. We want her to start doing more of that. Right now, she's taking responsibility for the work we're doing so we can maintain our independence. But that hurdle's still getting harder and harder to jump through. And it always looks better if she can do more of that work.
Okay.
I mean, I'll even go ahead and say that we've been engaged to prepare for an audit for another CPA firm to come in and audit another municipality. Now, I'm not expecting Rebecca to be able to prepare the financial statements, but somebody should be able to come in and do those cash to accrual conversions so we don't have any minimal accounting adjustments. And that also helps us because she's going to have to show us what she did, so she's going to have all the work papers organized. I spent a fair amount of time requesting work papers, and with Shelley not knowing what's going on and Christina not knowing what's going on and Lynn having 1,000 things to do, it takes a lot of time to get all that information, and it's not really very efficient. I mean, we started this in November. We were usually done in March, and every year different things happen and so forth, but we're hoping that we can get more solid numbers before we start the audit.
Okay.
What we're going to do is we're going to go ahead and we'll prepare an engagement letter for you for next year, and then I'm going to drop the audit fee a little bit, but then start itemizing all these other things we've been doing because it's just taken so long, and we want to see, encourage Rebecca or have another CPA come in and do those things, so we can, appearances look better than when somebody else is doing them.
Have we had a conversation with Rebecca to learn if she'd be
At
willing to
length.
do?
Yeah, it's going to be a challenge, and I would hope that she would like to do it because she's a tax person, but this is stuff she can do in the fall. But I don't know that commitment's going to be there. But we'll put it, here's how much we think we're spending as far as these things go. We don't mind continuing to do them. You can pay us to do them, but over the long haul, eventually somebody's going to have to step up and. Eventually they're going to say we can't do them at all, but right now we can do them. It's getting grayer and grayer, and it looks better if somebody else is doing them.
Right.
So the plan moving forward is that after we receive the engagement letter and it's a clear direction on the responsibilities that's being asked of Rebecca or an additional or a CPA, if it's not Rebecca, Maria, Rebecca, and I will sit down because we're going through the same thing at the airport level as well.
Yeah.
Discuss what that looks like for us and
What it will
fees.
cost.
Yes, and fees associated with that, and then we'll be able to bring that back to the council.
Okay.
Yeah, and if it's easier, I can come back to the next budget and finance committee with the engagement letters to help explain them. I don't know if it's.
I'd like to see it before then so that we can get answers from Rebecca on what that's going to look like, please.
Yeah. Because will she do it? Can she do it?
No, yeah, those are all questions that
Okay.
she's going to need some time to digest and figure out what that's going to look like for her on her end
Okay.
as well.
Yes, my understanding that Rebecca's, is looking at stepping away, and her son is looking to take over that practice.
Well, those are all conversations that's why I want the engagement letter and be able to sit down at a table with Rebecca to find out what's happening on that level.
Got it.
Sarah, you've been kind of quiet. Do you feel you have CPA?
I just have a lot to absorb, so just listening today.
I've never found out your background as far as accounting. Have you been actively engaged in accounting?
I have done accounting. I have done all sorts of things.
Were you an accountant at your previous position?
I wasn't an accountant, I'm not a CPA, but
Okay.
I've worked in accounting.
Okay, so most of this is looking,
But this is, yeah, and I've worked in public service before, like local and federal government, so this is very familiar.
yeah, so when we say Rebecca, we're just saying somebody internally,
Sure.
you know, not the auditors. And so
yeah,
this kind of
understood.
starts the process and so
Yeah.
forth, but yeah.
I think we're clear, right, Tony?
I think that's it. Let's make sure. Page 43. Yeah, we talked about that, increasing the role of the accountant, you know, on those budgeted reports, making sure they have the current amendments, and then also, you know, helping you make decisions or pointing out items if they need to be amended and so forth.
On the last one there, the special district component units,
Yeah.
what is that one?
Well, that's just verbiage in the management letter. Each year they change the management letter. I'm so glad you mentioned this because they keep expanding the requirements. You know, our government accounting standards keep changing things. And then now that Auditor General wants more information, if you flip the page, each component unit that you have, which is the air park and the CRA, now they want some of this information that to me is, what are you going to do with this information? How many employees do you have in the last pay period? How many independent contractors did you pay in the last month? How much did you pay to the independent contractors for the year? List all your projects over $65,000 during the year. What was the budget variance from the original budget? And you know, this is just more time that it takes getting this information. It's just crazy. And then now when we do this online filing, they're popping up new information like what's the total employees, total pay, total this, total that. So it's like
They added the CRA component last year to the online filing prior to the audit requirements, and so Brad and I went back and forth for about 2 months.
It took
trying
us
to
10
get
hours
the
to-
state to accept our filing.
Really?
Yes.
yeah, and then that's just an additional cost that we're absorbing. You know, the AFR is not my responsibility. It's just something we do because we know it's we've always feel responsible for it, even though it's really not our responsibility.
Gotcha.
We
It's
know.
called being a good parent,
Try to do the right thing.
right? For those of us in the room.
But yeah, each year they are adding stuff on, and you know they keep passing these things. We have peer review this year. Every 3 years, we have an outside CPA firm come up our you know what and look
Yeah.
through everything. And they select 1 or 2 governments, 1 or 2 of these, 1 or 2 of those. It's crazy. It's crazy. And then we have to self-inspect the other 2 years, and there's all these extra requirements and so
Wow.
forth. So.
Any questions, Tony? Any comments from staff?
Okay, so
I think we're good.
All right.
should I assume that you want me to attend the next council and CRA, or are you guys just going to report to them since this was lengthy?
No-
But
Normally you present.
I always have.
Yeah. So you'll put him on the agenda for us?
Yes.
All right.
I might do a scaled down version for them.
It'll be a pretty hefty meeting because we've got the school district is presenting, and then we also have, I think the water district is also presenting.
Do you want to do it?
Plus second hearing of the Country Meadows.
How about if, would you want to let them know that you met with me, and then I could come to the following meeting?
Should we do the?
That might be more appropriate.
Yeah, let's do August.
Then I can bring the engagement letter then. Is that okay? Or you want it sooner?
I'd still like it sooner. Rebecca's
Yeah, that's
hoping to
fine.
have it by the middle of July so she can have
Okay.
time to digest it.
Yeah. Sounds good.
So we'll do the audit in August.
Yep, we'll do a report under budget and finance about meeting for the audit.
What you might want to do is let them know that the audit has been finalized and we've met at the Budget and Finance Committee, because there is a June 30th deadline. We may not, there's no repercussions for not doing it by June 30th other than getting emails and things. They're not going to hold money back. They say they may hold money back, but we'll go ahead and put the hard copy reports in to Tallahassee. We'll work on that AFR, that's that online filing, and then we should be okay there.
Okay,
So if you would just want to let them know that due
You
to
bet.
a busy agenda that will be the auditor will do his presentation at another time. than that.
okay, we can do that.
And if you don't mind putting me towards the top, then.
Yeah, we'll get you out of here.
Well, I appreciate your time on all that. Thank you.
And we'll adjourn the meeting.